Hello everyone and welcome back to Shashank Finance Hub, where we simplify complex financial topics and help you make informed decisions. Today we are diving into a question many of you have asked. How does the stock market work? If you have ever been curious about what happens behind the scenes in the world of stocks, why prices fluctuate or how people make money from it, stick around because by the end of this video you will have a clear understanding. What is the stock market? Let's start with the basics. The stock market is essentially a marketplace where people buy and sell shares of publicly traded companies. A share, also known as a stock, represents a small piece of ownership in a company. Think of it like this. If a company is large pizza, a share is one slice of that pizza. When you own a share, you own a piece of that company, and as the company grows and earns profits, the value of your slice can increase. You might even receive dividends, which are a portion of company's profits paid to shareholders. But here's the key thing to remember. The stock market is not a single place. It's a network of exchanges, the most famous being the New York Stock Exchange and Nasdaq in US or NYSE and BSE in India. How does it work? Now, let's break it down. When a company wants to raise money, it can go public through an initial public offering or IPO. This means it offers shares of its stocks to the public for the first time. Once the shares are out in the market, they can be bought and sold on stock. Once the shares are out in the market, they can be bought and sold on stock exchange. These exchanges act as a middleman connecting buyers and sellers. The stock price is determined by supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell than buy, the price goes down. Think of it like an auction. The buyers bid on a stock and the sellers offer it at their price. When a buyer and seller agree on a price, a trade happens. Key players in the stock market. Now, who are the key players in the stock market? Here are the main ones. Retail investors. That's people like you and me who buy and sell stocks for a personal investment. Institutional investors. These are large organizations like mutual funds, pension funds, or insurance companies that buy and sell huge volume of stocks. Stockbrokers. They facilitate buying and selling of stocks. Nowadays, with technology, many people use online brokerage platforms. Market makers. They ensure there is enough liquidity in the market by buying and selling stocks even if there isn't an immediate match for a trade. Why do stock prices fluctuate? One of the fascinating and sometimes frustrating aspects of stock market is the constant change in stock prices. But why does this happen? The short answer is supply and demand. However, many factors influence supply and demand, including company performance. If a company reports higher profits, its stock price might go up because investors see it as a good investment. Economic indicators. Factors like interest rates, inflation, or GDP growth can impact investors' confidence and stock prices. Market sentiment. This refers to the overall mood of investors. If people are optimistic, stock prices may rise. If they are pessimistic, prices might fall. Global events. Things like geopolitical tensions, pandemics, or changes in government policies can have a significant impact. To give you an example, imagine you are investing in a company that manufactures smartphones. If their latest model becomes a huge success, the stock price might soar. But if a competitor launches a better product, the stock price could drop. How do you make money in the stock market? This is the part that gets everyone excited. There are primarily two ways to make money in the stock market. Capital gains. This happens when you buy a stock at a lower price and sell it at a higher price. For example, if you buy a stock for 100 rupees and sell it for 150 rupees, your profit is 50. Dividends. Some companies share their profit with shareholders in the form of dividends. These are usually paid out quarterly and can provide a steady income stream. However, it's essential to remember that just as you can make money, you can also lose money. Stock prices can go down, and if you sell at a lower price than what you paid, you incur loss. What are stock indices? You have probably heard terms like Sensex, Nifty 50 or S&P 500. These are stock indices which are groups of selected stocks that represents the overall performance of a market or sector. For example, the Sensex in India tracks the 30 largest companies listed on the BSE. The Nifty 50 tracks the top 50 companies on NSE. In the US, the S&P 500 includes 500 of the largest publicly traded companies. These indices give us a snapshot of how the market is performing as a whole. If the Sensex is going up, it generally means the market is doing well. How to start investing in the stock market? If you are new to the stock market, here's a quick roadmap to get started. Open a demat and trading account. This is your gateway to the stock market. You can open one with a trusted brokerage firm. Research and plan. Before investing, learn about the companies you are interested in, understand their business model, financial performance, and future prospects. Start small. Begin with a small amount you are comfortable risking. Avoid putting all your savings into the stock market. Diversify. Don't put all your eggs in one basket. Spread your investments across different sectors to reduce risk. Be patient. The stock market is not a get-rich-quick scheme. Successful investing requires patience and long-term perspective. Risk of the stock market. Of course, investing in stocks comes with risk. Prices can be volatile and there is no guarantee of returns. However, you can manage risk by setting realistic expectations, avoiding emotional decisions, investing only what you can afford to lose, investing only what you can afford to lose. To wrap up, the stock market is a dynamic and fascinating system that connects companies with investors. While it offers opportunities for wealth creation, it also requires discipline, research, and a willingness to take calculated risk. If you are new to investing, start slow, keep learning, and focus on long-term goals. And remember, the earlier you start, the more time your investment have to grow. Thank you for watching. If you found this video helpful, don't forget to like, share, and subscribe to Shashank Finance Hub for more insights on finance and investing. Having any questions about the stock market? Drop them in the comments and I will get you back. Until next time, happy investing. Thank you.